I'm about to spend $1,000 purchasing 6 brand new covered call ETFs using the Moomoo trading platform. The plan is weekly updates for the next month, tracking their performance, and whichever one wins gets a $10,000 allocation in my main $100,000 covered call portfolio. The first ETF I'm buying is S-Day, the Hamilton Enhanced US Covered Call ETF. This focuses on US dividend champions and is currently yielding about 17.5% annually using Hamilton's new 0 DTE options strategy. That's 0 day to expiration options, and this is the main reason why I'm testing this ETF. And the next one, instead of writing options once per month like traditional funds, S-Day can potentially write options every single trading day. The fund is hedged to Canadian dollars, so no currency risk, and it would add geographic diversification since my current portfolio is either Canadian focused or growth heavy. And really quick, I've noticed 80% of you who watch these videos haven't subscribed. An easy way to support this channel for free and to make sure you don't miss out on the final results of this experiment is to hit that subscribe button. All right. Second is Q-Day, the Hamilton Enhanced Technology Covered Call ETF. Q-Day targets US technology companies and is yielding approximately 20% annually. This uses the same daily options approach, but focuses on tech stocks, which tend to have higher option premiums due to their high volatility. I already have significant tech exposure through HHIS, so adding Q-Day might be doubling down on tech. Third is TSLY, the Harvest Tesla Enhanced High Income Shares ETF. And this ETF and the rest is all about me testing single company ETFs. This is the Canadian equivalent to the popular US TSLY, which launched January 16th, 2025. Tesla's notorious volatility, sometimes moving 10% in a single day, should translate into substantial options premiums, but it also means this could be the most unpredictable of these 6. Now, ETF number 4 is PLTE, the Harvest Palantir Enhanced High Income Shares ETF, also launched January 16th, 2025. Palantir has become a retail investor's favorite as the AI data analytics play. The stock sees massive swings as investors debate whether it's revolutionary AI or overhyped government contracting. ETF number 5 is NVHE, the Harvest NVIDIA Enhanced High Income Shares ETF. NVIDIA is the undisputed AI chip king. This might be the most stable of the risky single stock bets since NVIDIA has actual massive profits and market dominance, but tech stocks can still be incredibly volatile. And hey guys, really quick, I was trying to buy NVHE. I just realized I had to submit an application before I could buy that one. So there'll be a delay on NVHE, but it'll be in the portfolio when I do the update next week. All right, back to the video. ETF number 6 is MSTY, Harvest MicroStrategy High Income Shares ETF. This is probably the wildest card. MicroStrategy is essentially a Bitcoin proxy that happens to run a software business. When Bitcoin goes up, MSTR usually goes up more. When Bitcoin crashes, MSTR crashes harder. And remember, if you want to follow my day-to-day updates and see this portfolio's performance in real time, you can download the Moomoo trading app using the link in the description and first pin comment. Okay, so here's what we have. I got S-Day, Q-Day, TSLY, PLTE, MSTY. And then I'm just waiting on NVHE. Just need to get my application approved really quickly. All right, so I've never tested this many experimental ETFs at once. We have Hamilton's cutting edge daily option strategy versus Harvest concentrated single stock approach. Half of these funds launched in January 2025. They're barely 6 months old. Q-Day and S-Day are a part of the new Daymax series from Hamilton and are using 0 DTE strategies that have never been available in Canada before. Here is where I need your help. Which of these 6 experimental ETFs do you think will win this battle? And by winner, which ETF performs the best overall and which would fit best with my current portfolio? So leave a comment below with your prediction of what it will be. It will be S day for stable US dividend diversification, Q day for maximum tech sector income potential, TSLY for Tesla's EV dominance and volatility premiums, for PLTE for AI data and analytics growth, NVHE for semiconductor leadership, or MSTY for Bitcoin exposure and maximum volatility. Tell me your reasoning. Are you betting on daily options innovation, single stock concentration, the most stable underlying business, or maximum risk for maximum reward? And now, here are my next steps with all of this. Now that you watched that footage of me buying the shares, spending $1,000, starting next week, you'll get weekly updates on exactly how this battle is unfolding. And I'll be using the Moomoo platform throughout this test for two main reasons. And this is full transparency for you guys. Reason number one, I have a good relationship with their Canadian rep. When I had only a few hundred subscribers and no companies cared about this channel, the rep actually emailed me letting me know they enjoyed my content, just to let me know, and were confident I could make the channel grow. This early support by them was a big confidence booster for me, and it immediately got the company in my good books. And then number two, after that, I started using the app. So I'm familiar with the app. It's easy for me to use and I'm used to using it. So in order for this test to work, I actually had to show the account. So I had to pick a brokerage to tinker around with. And because of reasons 1 and 2, naturally I landed on Moomoo. So check them out in the link in my description. All right, now by the end of this month, we'll have at least 4 weeks of real performance data to make an informed decision about which deserves serious money in my main portfolio. And if I'm having fun doing this, I may just keep doing this as my new testing account for YouTube, where the community suggests unproven ETFs and we buy them in this account with my actual cash, no dummy accounts, and see what happens. I think $1,000 is a good starting number for me, since it won't hurt too bad if this all goes to hell, since I can make that money back through YouTube ad revenue. Full transparency, I'm already just taking all the revenue I make from this channel and I'm pouring it right back into the channel in order to create higher quality and just overall better educational content for everybody watching. So I just consider this $1,000 just part of my overall long-term growth strategy. This channel has turned into one giant covered call ETF where I'm just reinvesting my monthly payments back into it. So everything leads back to investing, I suppose. And remember, I generally want to see which ETFs you all think will come out on top, because your input helps me think through these investment experiments. And I may make changes to the allocations or remove or add new ETFs weekly based on your suggestions. Who knows? Anything is possible with this series. So make sure to leave a comment and let me know your thoughts. This is the most transparent test of new covered call strategies I've ever attempted. And we're going to learn what works in real market conditions with my real money. Now, check out my latest portfolio if you haven't already seen it, to see how I got to that $2,243 monthly income, and add me on the Moomoo app to see my daily updates over there. All right, let the covered call ETF wars begin.